Okay, good evening. I'd like to call to order the Nassau County Interim Finance Authority Directors Meeting, October 20th, 2022. And for the first item on the agenda is the approval of the minutes of the Directors Meeting on August 29th.
Move it. It's moved.
Is there a second?
Second.
All in favor?
Aye.
Aye.
Any opposed? Okay, the motion carries. The next item on the agenda, item 2, is the consideration of the county contract for E&A restoration. Martha, will you present?
Hello, everybody. So you have in front of you, there? Can you hear me now? Okay, good. Item number 52L22. This is a contract with E&A Restoration. It's a contract with the Department of Public Works. The vendor was selected via non-competitive bidding process, and the contract is valued at $10 million, and the term is 2 years with a 2-year renewal option. The funding of the contract includes the 2-year option renewal. The vendor, when the county did the bidding process, they had to do it twice because the first time around they did not have enough responses. The second time around, they had 3 responses. One proposal was rejected, and E&A was selected as the best vendor. The purpose of the contract is to actually, is to do general construction work on county-owned buildings and response to emergency situations outside the capability of DPW facilities management in-house crews. However, I have to say that the vendor will not be paid unless there's work that they perform, because it's an on-call contract. Are there any questions?
Mr. Chairman, if you don't mind,
Sure.
first I'll move it so we can discuss, and then I'll ask questions. So
Sure.
I'll move the approval. Martha, I think we've approved DNA before. We've seen this vendor before.
Correct.
So I guess if anybody from the county's here, obviously have they, other than being responsible and the best bidder, have they also done good work, and has it been high quality? And we've done not to exceeds before. Have they hit the limit, come in under? Is it a good relationship?
I'm relatively new with the county, but since
Subject to that, that's
since
fine.
working with the
And
ENA,
Sorry, and
And
who are you, please?
Doug Tooman, Deputy Commissioner, Department of Public Works.
Thank you.
Yeah, I was speaking of that so they can record it, thanks.
How's it going, everybody?
Good.
Doug Tooman. I'm one of the new deputies over the Department of Public Works. I'm currently working with ENA, and they're performing to all their tasks, and so yeah, they have found to be a suitable contractor.
And the 10 million, we've done 5s and 10s with them before. That's proven to be enough of an upper limit to cover what you might need historically?
Well, it
You
has.
haven't gone over. You haven't come to us for extra, so.
Yes, it has proven to be enough. There's an endless amount of work in the county, but yes, that should be enough.
I have no further questions, Mr. Chairman. I made it, nobody seconded.
Well, just a quick question also, Doug, but, so that's a not to exceed amount for this contract, but have they also given you standard rates and other, multipliers, other add-ons? In other words, this is on call, so as a job comes up, do you provide them with a scope of work? They respond, but have you already established what certain rates?
Yes, so it's
Time and materials?
It's
that
time.
kind of-
Yes, correct. It's time and material based. So obviously, this contract was bid a year ago. The cost of materials and time have since changed, but it's a percentage-based contract. So they have a 42% markup on materials and a 14% markup on labor. Actually, vice versa. 42% markup on labor and a 14% markup on materials. So obviously, as the economy changes, the contract naturally changes with it, given it's percentage based.
That sounds a lot better.
Yeah.
Yep, Great,
42 makes more sense with
Yeah.
benefits,
Yeah,
with
yeah.
benefits and FICA and everything
yes,
else.
yeah, of course.
Good. I have no further questions.
Great, thank you. Is there a second?
Second.
All in favor?
Aye.
Aye.
Any opposed? Okay, the motion carries. Item 3 is the state legislatively mandated reviews of the Nassau County Industrial Development Agency, the Nassau County Regional Off-Track Betting Corporation, and the Nassau University Medical Center. And Connell, you'll present?
Yes, thank you. Good evening. Recent state legislation requires NYFA to conduct biennial audits of the Nassau County IDA, the Regional Off-Track Betting Corporation, and the Nassau University Medical Center, and generate findings and reports thereon. These initial audits must be completed by December 31st of this year. To avoid duplication of the financial audits that are already done, the focus will be on pursuing various performance or operational audits, reviews, or analyses. At your previous meeting, you approved a list of pre-qualified firms to provide these services following a request for qualifications. You're now being asked to approve the scopes of services and the selection and retention of firms from that list. Once approved, these firms will undertake the reviews of the entities and provide the reports and findings before the deadline this year. The staff committee has reviewed the list and recommends the approval of the selection of Alvarez and Marcel Public Sector Services LLC to undertake the review of the IDA, and the selection of Deloitte & Touche LLP to perform the reviews of OTB and NUMC in accordance with the respective scopes of services described in your materials. You are also being asked to authorize the chairman or his designees to execute an agreement for services with each of the selected firms at the hourly rates specified in the materials, with fees for each of the reviews not to exceed $100,000, provided that the chairman, in his discretion, may authorize an expenditure for an additional $50,000 as he deems prudent. With that, I'm happy to address any questions.
50,000 per.
Per
con-
review, I'm
okay,
sorry,
got it. That
make
gives you
that
enough
clear.
room to.
Per
navigate.
review, correct.
Mr. Chairman, I'll move it and then ask a question.
So moved.
Only with regard to the Nassau off-track betting, I just have a peculiar interest. I know it's been a while since I was chairman of OTB, but I was for 5 years. And at the time, there was not only profits, but surcharges. And I don't see that in the scope for Deloitte, that they would look at. It may have changed, too, in the meantime. I know you have got the Genting deal now with the video lottery
Right.
terminals, but are they gonna look at all of the streams of cash that could come to the county, including but not,
They're
including
going to look at
surcharges?
everything they can in the time limit. They're gonna focus on the VLTs. I think to the extent they can review all the revenues, we're gonna work
Okay.
with them in the time frame and under the budget to see.
Because those were theoretically due even if they weren't profitable. That's kind of where they, it used to be a surcharge on every
Right.
ticket.
Right,
but-
the distribution, right,
yeah,
right, the
so
handles and the rest,
The
right.
word was missing. I'm sure the theme is there. I just wanted to make sure.
theme is
they're
there,
considering
correct.
it all. That's my
Correct.
only question.
That's still in the budget.
It is.
OMB budgets for that surcharge.
Surcharge and profits, so, yes, okay, good. So as long as they're looking at all of the things that could be due and payable to the county, as and when, I think we're fine.
Yeah, I think we want to get an understanding of, A, is the county getting the right amount of money under those VLT contracts? And also to the extent that those VLT revenues are subsidizing otherwise losing operations of the corporation to the detriment of the county that could otherwise be going for more county critical services than losing gambling operations. We want to understand that as well.
Got it. I have no further questions, Mr. Chairman.
Is there a second?
Second.
All in favor?
Aye.
Aye.
Any opposed? Okay, the motion carries. And next item is to adopt the staff report concerning the proposed Nassau County multi-year financial plan, fiscal years 2023 to 2026, and the recommendations contained therein. Evan, will you give a synopsis and update on your high-level review of your report and the staff's work?
Yes, thank you, Mr. Chairman. Staff reviewed the administration's proposed multi-year financial plan for 2023 through 2026 and prepared a report of our findings. The report discusses, and by the way, that report was distributed to everyone in advance of today's meeting. It discusses in detail our assessment of the risks and concerns. So unless there are specific questions about any of the individual items, I plan to limit my presentation to a higher level discussion of fiscal challenges confronting the county. I'll begin with some positive comments. Our general assessment of the county's finances is that despite the ongoing pandemic and high inflation and threat of economic recession, the county's near-term fiscal outlook in the major funds continues to improve. In the short term, we find that the county will likely end 2022 with another gap surplus. And further, assuming that the county could avoid a deep and protracted recession, and there were no catastrophic expenses for such as a large judgment or revenue loss from adverse litigation, the proposed budget for 2023 contains risks that we feel can be managed. However, to fulfill our statutory oversight role, we need to look beyond 2022 and 2023's finances to assess the likelihood of the county incurring a deficit of greater than 1%. Unfortunately, in doing so, we are forced to look through a lens that is clouded by several external factors which are unknown at this point, how those factors, what the outcome will be. So that's a segue into my less sanguine comments. We project potential deficits of $12.9 million in 2023, $76.4 million in 2024, $100.8 million in 2025, and $152.3 million in 2026. However, depending on if certain risks that we highlight in our report materialize, on top of those, for such items as a deterioration in the county sales tax revenue caused by a recession, an adverse litigation related to the GIS tax map verification fee that is currently on appeal by the county, the projected deficits could grow much larger and reach $39.3 million in 2023, and then increase to $127.7 million in 2024, $188.4 million in 2025, and $241 million in 2026. To be clear, those projections already include favorable offsets from the budgeted contingency reserves that the administration included of $25 million in 2023 and $35 million as a contingency reserve in 2024, and potentially a favorable offset of $49.2 million in 2023, and that's related to resources that are currently earmarked for the retroactive costs of a pattern-conforming labor agreement that would no longer be necessary if the county reaches agreements with the unsettled unions before the end of this year. And that's because those resources are already included in the 22 budget. So if they reach agreement by the end of this year, that would free up the equivalent resources in 23. To state the obvious, though, the projections that I cited are exceed the 1% deficit threshold for imposing a control period. We also have concerns regarding several significant liabilities that could impair the county's efforts to maintain, or to attain, rather, and sustain long-term structural balance. I've mentioned these before at our August, or in our August meeting. These concerns include the county's long-term liabilities for tax certiorari refunds, non-certiorari litigation, workers' compensation claims, and the county's potential contingent risk stemming from the deteriorating finances at the Nassau Healthcare Corporation. There was also an open CSEA grievance regarding COVID comp time that is estimated by the county to cost they value it at up to $109 million. That grievance is ongoing. We don't know how that will settle, or how the ruling of the arbitrator will be. And it's also unclear how an adverse ruling would impair the county's, whether it would be a cash hit or whether that would merely impact, or not to say merely, but it would impact terminal leave costs when these CSEA employees retire.
So you're saying it could be outside the 5 years even of the 4-year plan?
It could be,
still
or
substantial.
spread over many years just randomly as people retire.
Got it.
So it's unclear exactly when that might hit, if it even is totaling $109 million. To quell our concerns, the county may point to the large reserves that they have amassed in recent years, which currently stand at $440 million. We acknowledge the county has done a good job at preserving most of the operating surpluses in recent years by prudently transferring the resources into these reserves, which can then be utilized as a fiscal tool to pay known long-term liabilities when they become due and payable in future years, while relieving the operating budget of that burden. However, as impressive as the size of these reserves are, they are insufficient to cover the entirety of the county's estimated liabilities that are disclosed by the comptroller in the annual comprehensive financial report.
I would say they also don't lower the cost structure after they're spent,
Correct.
for the year after they're spent.
Correct, but, if I'll give credit to the county,
Yeah.
to the administration, the current plan is to use these resources for non-recurring expenses, other than the reserve that they had established to pay for the new longevity award agreement, which is a recurring expense, and they have a finite amount of money that they set aside in reserve to pay those costs.
But going back to the question, Evan, one quick question. Aside from the one-time reserves that they currently have, if you take that away, do you see under the current plan or in your projections, future year revenues growing as quickly as future year expenses?
No, and that's a good point. I'm glad you brought that up. In our report, we do mention and note that the growth rate of expenditures is exceeding the growth rate of revenues, our projections show. So therefore, there is a structural imbalance that as the two diverge, you will always have these out-year gaps that must be filled. The question is, how will the county, go about filling those gaps? What gap closing initiatives will they develop and implement, and whether they also are relying on these one-time reserves, or are they actually implementing solutions that provide recurring relief?
Seems to me we wrote them a
So-
letter asking for some of those
Yep.
pieces of information.
Yeah, so I think that's a good point, Chris. So, for those people listening in, NIFE had sent a detailed letter of questions regarding some of the risks that Evan has just identified and mentioned, including some others. The date of that letter, I don't have it. I'm looking here.
July.
July. So, I know that they've acknowledged the receipt of that letter, and in your discussions with them, Evan, have they indicated any intent to respond to that request for information?
We have not received any formal confirmation that they're developing responses or answers to these questions.
Are they aware that the statute doesn't give them a lot of options when it comes to answering our questions, other than to answer them?
I presume that's a rhetorical question.
Yeah, I guess. Right. Or is there legislation that's changed that we're not aware of?
I'm not aware of any legislation that gives them the flexibility to ignore
Okay.
NIFA.
Thank you. It was rhetorical, you're correct.
Yeah, so I think the letter that Chairman Barsky sent to the county executive in July, I think it was pretty clear that in order for the board to consider sunsetting, in its evaluation of whether to sunset the control period, that it was seeking the answers to those questions that it could use as part of that determination, deliberation.
I think you've done a great job putting together a comprehensive report. You say a lot in 14 pages and communicate a lot of concisely but accurately stated information and projections. I appreciate the staff's hard work on what is an easy document to read.
Thank you.
Yep, agreed.
I agree with that, too.
Thank you. On behalf of staff, I thank everyone for those kind words.
Mr. Chairman, I'll move the adoption so we can start the discussion if there is any.
So moved.
Second.
Are there any other questions for Evan, or?
Yeah, I mean, they have to adopt a budget now, so we'll
Right.
wait to see what the legislature does, right? So-
Yeah, also for the sake of the board, Evan, and for the members of the public here, could you just quickly run through the timeline of what happens next, what happens, down the road in terms of budget adoption? Some of the people here are new to the process, as well as people in the public. Can you just quickly go through the timeline in terms of what happens when and what's expected, and when will something come back to NIFA to either approve or disapprove?
Right, yes. As I understand it, the county legislature is scheduled to meet on October 28th for them to adopt a budget. They will, at that time, have an opportunity, if they choose, to advance amendments to the proposed budget. As of now, I'm not aware, well, I'll just leave it as that. So they have an opportunity, should they include amendments, then the county executive would have an opportunity to veto those amendments, after which the county legislature could choose to reconvene and attempt to override the vetoes. That veto override period totals 17 days. So at the end of the 17 days or sooner, we will have a multi-year plan that is ready for the board to consider.
So they could pass it unchanged, and the county executive could sign it, and no 17-day clock runs, and we could meet. So our meeting time is dependent on
Correct.
the other steps.
I mean, theoretically, we can meet on October 29th.
In costumes.
Right. But also, I think, but Evan, I think you also raised an interesting point about the NIFA role in this whole process, because, as you mentioned, the legislature could override the county executive's budget, maybe in an irresponsible way, by spending money that there are no means for, and override the county executive's veto. But NIFA would essentially have the ability to essentially reject that overridden budget and send it back, and require that it be, in our view, balanced, if that were the case that it was not. Correct?
Correct. So if
We've done
the
it for
final version of the adopted budget, post-veto override period, is determined by the board to be inadequate, then yes, the directors can vote to send it back, reject it, send it back for a remediation. The county would have an opportunity to resubmit that financial plan to NIFA, and then you get a second crack at the approval. And if you were still unsatisfied or dissatisfied with what has been presented, then you could impose a budget and financial plan on the county.
Is there a time period?
Well, the idea is to try to get this all done before the tax bills have to be sent out.
Yes,
So the one
mid-December.
practical factor or logistical factor is trying to get all these things done so that tax bills can be mailed in a timely way.
And there used to be and historically, until last year, a need to get it out in time for cash flow borrowing to occur, right? I think last year they had so much money they didn't have to. But that was the first time in 15 years they didn't have to, or longer.
Yeah.
And since you bring it up, Director Wright, the county the administration does not have any plans to do a cash flow borrowing.
So there you go.
Again.
Right, because they've got the money in the reserves.
Yep.
Yeah. Good.
Well, again, great report, good discussion. Any other questions? Otherwise, I think
It's been made and seconded.
we've made and seconded. All in favor?
Aye.
Aye.
Any opposed? Okay, the report is considered adopted,
Good job.
accepted.
I have a couple of discussion items.
Sure.
If you look behind your, in your packets, behind tab number 4, there are two schedules behind, on what's called discussion items. And what I'm about to present to you tonight, which requires no action on your part, this is just purely informational. The cash basis results of the Nassau County Interim Finance Authority for the 9 months ended September 30th, 2022. And what I can point to you is if we look at total operating expenses for the 9 months, we've incurred 65% of our budgeted expenses while 3/4 of the year have elapsed. And that flows all the way down to the bottom line. The point being, with the engagements that we're going to undertake with regards to the IDA, the OTB, and NUMIC, we should be able to fit this into our budget without making any budget amendments. Okay. Are there any other questions with regards to the cash basis results? If not, I'll direct your attention to the investment schedule. that we have it at September 30th, and the nature of our investments are either government issued or federally government-backed securities. All of these investments that you see before you will mature on November 15th when our debt service payment is due. Our debt service payment is going to be $16.9 million, and we invested another $2.8 million in the beginning of October. So if we add the 2.8 plus the 14.3, we'll have about $175,000 more than what's required for our debt service payments. Any of those excesses are turned over to the county.
And what's the maturity of, the original maturity of these investments?
The original is November 15th.
No, saying the 3-month, 6-month, 1-year treasuries?
It staggers out.
Okay.
It starts in, for this period, it starts in May, and then each month thereafter. So it would be 6
So
months.
when you reinvest those proceeds that are maturing, what length of securities will you be reinvesting in?
We're not going to reinvest these at all.
Okay.
They're gonna mature,
Okay.
and then we're gonna disperse them to satisfy debt service
for some
payments,
principal
Okay.
and then
payments.
disperse the remainder.
And as new money comes in,
Right.
right, you'll reinvest it on what basis?
That usually happens in May, all right, because what we do is we set aside for 6 months of interest and 12 months of principal. So come May 15th, everything is gonna mature, but what we'll do is we'll take the principal amount that's going to be due November 15th and roll that over, and that'll be a 6-month period. So, you know, the investment climate is getting, you know, more investment friendly and so forth.
Sure.
And we should be able to see some decent yields, which the county will benefit.
Good.
Can I answer any questions?
Good.
Thank you.
Thank you. No action required on these, right? This is just to discuss.
Yep.
Yeah, I'll move to adjourn.
Is there a second?
Second.
All in favor? Right. Okay,
28 minutes, that's all.
thank you very much.